Alrighty, folks, we are going to have a conversation that we just need to have, and it's going to go under the umbrella of be careful what you wish for. Beth, what are we talking about?
Yes. So I have been telling people lately to be careful what they wish for because if they're wishing for interest rates to go down to solve their real estate woes, that's not what I see is going to happen. When interest rates come down, that's not going to solve your problems or make investing easier or buying easier. I think
Yeah,
that
yeah,
when
totally
rates
agree.
come down, the demand that has been sitting on the sidelines is going to come back in off the sidelines. People are going to jump back in and competition is going to increase. And then what happens when competition increases? Well, we all saw that last year, first half of last year in 2021. I don't think we're going to see that.
No.
I do not think we're going to see a repeat of that. So please don't take me wrong, but that's just the
Mhm.
most recent example. When demand increases and supply is still not there.
Yeah. This is such a good conversation because people can go back on your playlist on my channel. It's a very sophisticated name, Beth. That's your playlist. Last summer, you and I talked about, I think it was August. Rates ticked over 6% for the first time, and we were talking about open house ghost towns, nobody showing up. Yeah, it's August, but the market stopped. It froze. No demand. Then, like seemingly 6 or 8 weeks later, rates came down. They went back to the fives. You know, transactions picked up. Now, for the month of August 2023, we've been above 7% the entire month, I believe, and near 7.5 most of that month. I believe what's happening right now is the marginal buyer is starting to think seven bad, six good. So what does that mean? That means if we get the 30-year mortgage rate to a 6.98, 6.93, 6.87, something in the high sixes, you're going to see this marginal demand get uncorked, released, whatever you want to call it. And unfortunately, 6.8% mortgage does nothing for supply. If you're frozen at 7.5 because you don't want to list, you're not unlocked at 6.5. So
No, no.
it's it's you're right. Be careful what you wish for. A lot of people are wishing for 6.5% mortgage rates, and that would be, frankly, I think I've said before, a 6% mortgage rate today, like 6.0, would
Yeah.
be horrible for housing.
It
Horrible.
would. I was just looking just this morning before our call to see in my area, which is the greater Seattle area, if people don't know. I was looking to see houses that sold in the last 30 days, and we're selling at right about 100% list to sale price to list price.
Okay.
So even at over seven, and this was the most up to today, up to yesterday's data for solds for the last 30 days, we're still tracking right about list price equal to sale price, meaning people aren't necessarily, some places, a few are getting bidding wars, of course, and a few are selling for lower. But overall, it's breaking even.
Yep.
And if rates go down and we have more demand, we may start seeing prices start to creep up a bit. I don't think we're going to see those spikes like we saw back in April of 2022, where I think
I
that was
hope
a
not.
month that the median, it was 12.9% or something around that, like that over list price,
Yeah.
112.9 or something insane like that was the median price across
Yeah.
all of King County,
That's not good.
Washington. I don't think we're going to see that, folks. But if we're expecting that prices are going to come down and rates are going to come down too, I'm not seeing that taking shape.
No, I don't see it either. I again, as we kind of talked about in the first video, I just the only answer to this is time. We need time for affordability to get better with wage increases. We need time to come in for interest rates to drop a little bit. Um, we need time for life, right? You instead of 5 months, you look at 5 years, more life situations happen, more babies are born, more divorces happen, more health scares, more job transfers, right? We're still going to be doing transactions, but we're not getting back to 2019 levels for a long
No.
time.
one other thing that I was considering was there's a lot of people out there with a lot of equity in their homes too. At
Mhm.
some point, they may need to access that equity.
Sure.
And that could be something that could drive sellers off the fence at
Maybe.
some point. I don't think they're there now.
No, they're not going to be, because again, it's a life event, right? You
Mhm.
need the capital for something.
Right.
Um, yeah, it's
As time goes on, more and more people will make that leap. And then
mhm.
20 years from now, there'll be a few people saying, like, oh, yeah, I'm still,
Yes,
I'm paying
I
off the
just paid
last bit
off
of my
my
3%. Another 3 years, I'll be done, you know?
yeah, yeah, yeah.
And I'll probably be one of those people, honestly. I don't
Oh,
feel
I
like
have
I'm
some too.
ever
Yep,
gonna
never gonna pay. Yeah,
sell.
yeah, I'm not getting
So,
rid of that. That's crazy.
right. But so then the question is, well, what do you do if that's not going to solve our problems? What will? The answer is maybe not sexy, but it's relatively simple. It's just doing the hard work and putting in the time and effort,
Yeah, yeah, because
being
I think
patient, finding
y-
ways to, and making sacrifices is the other component. You have to make sacrifice and you have to work hard. I don't know anybody who's been successful in real estate didn't do those two things.
no,
People will pitch it as easy and, free, easy,
yeah,
free, now rich, like but in reality, that's not realistic. And people have to be able to have that grit to
mm,
jump in and tough it out. And it's like, okay, if this isn't working, what is going to work? And that's going to vary from person to person and market to market and different people's goals. But
yeah,
there are ways to do it. But waiting for the market to calibrate itself to the ideal moment, I can tell you after 25 plus years that never happens. Ever since I became involved in real estate to now, there's always been some reason. I know Dion's done some really good videos about first this headline happened, then this one, then this one, then this one, then this one, then this one. And like every couple years is something different. It's never going to change. Right
yeah,
now, the talk track is that rates are high, inventory is low, prices are still high. This stinks. It's hard. If you fast forward 20 years from now, it'll be something else, but people will be going, oh man, those people that bought back then, good thing for them. So just like 20
yeah,
years ago, back in 2003,
yeah.
there were reasons why it was difficult back then, but those that found a way to make it work just to get started back then, get on the road, those people are doing really well now. So
I couldn't
you
agree
could pick
more.
a year, could be any year.
Yes, folks, at the end of the day, be very careful what you wish for. I think there are a lot of people waiting for 6% mortgage rates. And I think a lot of demand will pop off. Beth, how can people find you?
Yeah, people can find me at bethtraversogroup.com or find me on social media, Facebook, Instagram, etc. I'm out there. Love
Awesome.
chatting with people from one rel at a time.
Awesome.